Hello guys, it's Chris from the tradingexchange.co.uk, and this is the second video for using the moving averages crossing strategy to get into trades and hopefully make plenty of money during the day. So, first video we made was to look at the German DAX. We applied a couple of different moving averages to trigger our trades and a trend indicator as well. So I'm just going to load that up again. Okay, fair enough. So this was the trade we entered earlier on. It was about 5 minutes ago, 10 minutes ago maybe, that we did it. And we entered the trade based on a cross. We left it, and at the moment there seems to be a little bit of momentum. But, you know, again, we're not really going to get too excited about it. We'll just leave it and see what it does. So, what we're going to do now is to just maybe have a look at a couple of other ways that we can use this same strategy to get into trades. I just talked about using a cross of these two. But again, what we want to try and find out are really high probability setups. Okay, nothing is a certainty in trading. It's all about finding high probability opportunities. Ones where you can utilize a risk-reward ratio that's in your favor if you catch a winner. We mentioned in the previous video, you're going to get losers. It's going to happen, unfortunately, but you want to try and get the winners to run as long as you can. Okay, so we're going to take a look at a few different charts then. So we're going to start with the Euro Pound. Okay, so we're going to zoom out. We're going to zoom out to a 15-minute chart. We're going to bring in that 50 period moving average as our trend indicator. Zoom out a little bit to see what it's got. So this is a typical example of how to make the wrong assessment on a trend. When we were initially looking at it from sort of 20th of January to now, looks pretty heavily bearish. Slight swing up and then another movement down. When you get a little bit more familiar with things, you'll notice that that particular pattern is really quite common. It kind of fades the move, retraces a little bit, and continues down to extend a similar amount to what it did before. But of course, if you scroll back to the beginning of January, it's actually bullish. And even in the more longer term, if you scroll back to October, for example, I mean, all the way back to December, it was pretty heavily bullish. A lot of sideways movement all the way back to March 2003. But then, of course, 2014 January, bearish again. So it really just, and I mentioned it in the first video, it depends on the type of trading style that you employ as to which time frame or section, sample of time you choose to determine the trend. Okay, so if we assume that this one's bullish at the moment, then we're currently looking at testing this moving average line, which I think is always a good way of activating trades. So what I like to try and do is to use the technical data myself to trigger the trades, but also ask myself, if I was to back one of these pairs, the euro versus the pound, which one's the strongest? And I'm not a fundamental trader really, but I do like to try and keep account of some things. And of course, at the moment, both pairs are fairly weak. No one really wants to buy the pound at the moment. And the euro is also has been hammered of late. Mario Draghi's been doing quite a lot of easing, so the euro is going to be losing value. But until Mark Carney comes along and says, oh, actually, the pound's doing well, the UK economy is really strong right now, you know, employment's doing well, production's doing well, construction's doing well, the services doing well, everything's doing well, all the indicators are suggesting that we're strong, we're going to start increasing rates again. Then you get that expectation, that rate hike speculation, and the pound starts to become a lot more valuable again. Which of the two are going to do that first? Is it going to be the Eurozone? Are they going to start increasing rates before the UK do? No, probably not. When you consider in the ECB's most recent meeting, they're suggesting that things are still struggling. Rates have changed recently anyway. and possibly even going to continue to go negative, then it's obviously the pound that's probably going to do this. So would you be buying the euro versus the pound at the moment? Possibly not. But the trend itself, the trend indicator itself, suggests that we should. So you just got to be aware of a couple of pitfalls of this type of system and this type of strategy. You can trade just technical data only, and a lot of people that do that will make a lot of money. But if you can have a basic understanding of fundamentals as well, it will just allow you to not get into a trade that can potentially trap you. So whilst the technicals right now are saying that you probably want to buy this, I just personally wouldn't. Okay, selling it would be difficult right now as well, because it possibly still does want to rally a little bit more, and we might even be able to get a sell closer to 78. But anyway, so for right now, whilst we've had a cross to the downside on these two moving averages, our system would say don't sell it because we're bullish. We're only going to buy in this system, which would have been there, and we would have taken quite a decent win off of that. If we were trading on a 4-hour chart, we would have actually taken 350 odd pips. And again, at £1 a point, it would have taken a bit of time. I mean, what would that have been? Almost the best part of a month. But, swing trading takes a little bit more time. Okay, so let's go and take a look at a slightly shorter chart, and just while I'm thinking about it, go and check in on this trade we had open and just leave that there for now. Maybe zoom in a bit more, get a bit more data. There we go. Okay. So we just looked on a 4-hour chart that showed us a bearish 50 period moving average. I've now gone into a 5-minute chart, and it's clearly bullish on the 4-hour chart, I should have said if I didn't, but it's bearish right now. So this particular chart probably does follow my own personal bias on this pair. So another another thing to make you aware of is that the moving averages will change, and they will change quite frequently within the course of a day or a week. One day it could be really bearish, one day it can be really bullish, and I think the main thing is to just not worry too much about that. If you want to trade on the purely technicals only, just follow the system. You're going to get some trades that will win, you're going to get some trades that will lose. Next thing to try and bear in mind when you trade in this system is your entry and your exits. Now, you can manually watch these trades and just kind of get out whenever you're in profit, and be comfortable with the fact that you're going to have to sit on a loser for a while, but as soon as it turns positive, you get into a profit. It means your win percentage will be like 80-90%, and you're always winning, which is great. But the downside to that is that you could be sat on massive losers, and eventually you will lose a lot more than you win. So you'll lose 150 pips for every time you win 5 or 10. And as far as maintaining your account is concerned, that's a way of pretty much losing everything within a few months. I probably wouldn't recommend you do that. You want to be comfortable setting stop losses, and you want to be comfortable trading and limiting the amount that you are going to lose to your account. And this kind of trading strategy, you don't really want to lose more than 1% of your account per trade, because you might lose 10, 15 trades in a row before you catch a big one. So if you're risking 10% on a trade, if it loses, then you're going to go and wipe yourself out. And of course, the more that you lose, the smaller your balance will be. So if the trades are always the same size, it's going to use up more and more of your equity each time. So you've got to be smart with you using your stop losses and your trade size to limit it to the size of your account. So this particular trade here, we probably missed it. We came up, we had this kind of bearish move down. It retraced, came up and touched the 50 line, and then rolled over. And so that would have been the entry right there. Okay, would currently be around about 15 points up at the moment, which is not bad at £1 a point, or whatever it is you want to trade. Okay, let's take a look at another one. The French index, affectionately known as the CAC. Okay, it follows the German DAX, follows the S&P 500 and some of the other major stock markets as well. And at the moment, certainly intraday and in the last couple of days, the moving average has turned bullish and there is a rally. It's been quite a large sell-off over the last kind of week or two. So this is suggesting it's an opportunity to buy. So you could have bought any of these touches on the moving average line. And then when it crossed, I mean, I think this was a gap open this morning, so you can never really predict a cross or a gap. But again, suggests there's an opportunity to get in to buy. So what we would be looking for on this particular market would be something like this. Then a cross to go up. Whether that happens, we don't know. And if it doesn't, look for another market. You don't just have to trade one market, guys. You can, whilst I personally prefer to trade the DAX, I don't only trade the DAX. There are other markets out there to trade as well. So if it doesn't set up and the market hasn't come to you and it's not giving you that technical signal, don't chase the trade. So that trade we opened earlier on seems to be doing okay. We're a few points short of the stop. It'd be really great if we can catch that while we're making the video, but if we don't, it's not the end of the world. So what can you do with these? Well, you might actually say to yourself, well, I'm not really happy with just risking 1-to-1, which is what I did before on this previous one. I wanted 25 points and I risked 25 points. So what you might actually then do is you might move your targets. So for example, I'm going to move my stop loss now up there. Sorry, my take profit target up there. But I'm going to move my stop loss to break even. Okay. So if it comes out and it takes me out, fine, no problem. I'll take 150 trades stopping me out at break even. I don't mind. That's fine. I'm happy with that. Because every time this goes up 25 points, I'm just going to move my stop loss and trail it 25 points and move my take profit target and just keep moving it up and keep moving it up and up and up. And eventually you'll catch a move where you've moved it 5, 6, 7 times. You've caught 150 points and you barely risked. Well, I mean, I had a 25 point stop loss on here, so I would have risked 25 points. It didn't go down there, it didn't stop me out. But it continued moving to the upside. So it's just a good way of moving your winners. And my New Year's resolution for this year, and I don't like resolutions, but what I tried to do was to kind of make my winners win more. It's too easy to kind of see 17, 16 pip win and think, oh, brilliant, I'm just going to take that off the table. Excellent, happy days, I've got to win. You know, hashtag win percentage, whatever. But there's no point in only winning how much you've risked. You want to win more. When you catch a winner and you catch a good trade, that's the one to just hold on to and just hold your nerve. And just watch it, hopefully, continue to move up. And the worst case scenario that happens for me right now is that I get stopped out at break even, actually for a tiny loss. I think it's a 20p loss. And I've just not wasted, but it's cost me half an hour of time where I had an opportunity to make some money and didn't. It's not the end of the world. Preserving your account is better than losing it. So yes, I could take 16 quid off the table now, or I could just continue to roll with that move. Trust that analysis. If we come back and have a look at it again, we're still positive. The moving average is still pointing both to the upside. We've still got this trend indicator telling us it's bullish. So until we get across to the downside, there's no point in getting out of this trade too early. And that leads me to my final point. So whilst we're moving our stop losses to trail this move and continue it going up, I've moved my take profit target higher. I'll only do that until I get the signal telling me that it's time to get out. When these two touch each other to the downside again, it's time to get out. And if it happens, it happens. So I hope that's helped you guys to kind of understand a little bit more about how some fundamentals play when you're choosing these strategies, about points to get into these trades when they come and test this trend indicator line here, about how to move and roll with your winners when you've caught one that works, and of course how to accept the fact that you're going to get stopped out on some of these trades for break even. Sometimes you're going to get stopped out for 25 points or whatever it is your stop loss was initially. And when that happens, you shouldn't get frustrated about it. Just look for another opportunity. There are always opportunities in the market. Don't chase them, but when they present themselves and they've come to you, then take them. Anyway, best of luck, guys. It's a great little strategy, this one. Feel free to modify it however you like. Ask any questions that you want to, either in the forum or send us a message. And we look forward to seeing you in the live trading room.